Good morning, everyone. Thanks for joining. I'm here with Jamie White, our business finance specialist. So she's joining us today to kind of introduce herself and give you guys a little bit of a taste of how she can help you in either buying, selling, or just in business in general. So very excited for you guys to be joining us. Jamie, thanks for joining us this morning. I'm really excited to have you here. Welcome.
Thanks so much for having me, Stuart. Great to be here.
Awesome, so exciting. So yeah, look, as I've already mentioned, and you've been introduced to the group, you're a kind of a business finance specialist. So do you want to give the guys a little bit of an like a bit of a background, what your experience is and what you currently do now in your business?
Yeah, so my experience, I'm a CPA accountant. I was working in boutique public practice accounting firms for almost a decade. So mostly working with small to medium businesses from a tax return compliance perspective and helping them manage their finances. I recently, about 12 months ago, went out and launched my own bookkeeping practice, which is Next Era Bookkeeping. And the idea behind that was I saw a lot of opportunity in the bookkeeping space for proactive and strategic bookkeepers. I see that because the bookkeepers have that day-to-day experience with a business, they have a lot more capabilities in terms of helping the business owners from a more ongoing, regular perspective than a tax accountant, which I previously was. So I really wanted to have more of an impact on business owners. So that was the idea behind opening up Next Era Bookkeeping. And we really help our clients in terms of managing their financials and being able to complete the whole bookkeeping function for them. So bookkeeping, payroll, and BASs are the main core services that we provide. And we're really just freeing up the business owners' time so that they can focus their time on what they do best in growing their business.
Yeah, that's great. And I think, from my experience, those are the things that generally fall off the wagon when you get busy running the business. And, if you do that over time, it can mean a little bit of mayhem at the end of the financial year at least.
Absolutely. I've seen it so much in my experience. So it's really important to get on top of your financials, that's for sure.
100%. Awesome. Well, thanks for that, Jamie. So, yeah, look, today I've got a couple of questions that I think will help you give some gold nuggets to the group, whether they're on the buy or sell side. Obviously, there's considerations on both sides when either selling or buying, and I think just having that awareness of what to look for and what people should be thinking about will really help them in their journey. So, the first question I've got is around some of the common considerations and questions buyers should ask a vendor to uncover some potential risks and opportunities within the financials themselves.
Yeah, so this is a great question. So, what I would be asking for personally, I'd be asking for the most recent 3 financial years, balance sheet and profit and loss. And it'd be ideal to also get a month to month profit and loss and balance sheet for the most recent 12 months as well. So you can look at the trends and you can
Mm,
do some more assessment and analysis around what's going on in the business. A cash flow report would also be really handy because cash is king in business. We need to be able to manage our payments and all our liabilities that go with having a business. So those key reports, balance sheet, profit and loss, and cash flow report would be amazing. A lot of the time, you'll find that small business owners won't have that cash flow report ready. So
mm.
a balance sheet and a profit and loss are your main core reports that you're wanting. So, another question is for the vendor, have those reports been completed by an accountant or a bookkeeper? Have the figures been verified? Are they accurate figures? Because that's really important as
That's
well
a
when you're
great one.
making decisions. Yeah.
100%. Because I mean, to that point is at the end of the day, if it wasn't completed by a professional, the numbers only reflect what was entered in the system, right? So it could potentially be, there could be errors, it could be mistakenly categorized, so you're not looking at the right things.
Absolutely. And 99% of the time, if it's not a bookkeeper or an accountant completing those record keeping tasks, most of the time you'll find errors and
Mm,
inaccuracies in the data. So it's really important to make sure those figures are verified. So I guess delving deeper into the balance sheet in terms of what to look out for, what you could ask the vendor, cash, as I mentioned, is really important with the business. So asking questions like, what are the average days that the business gets paid by the customers? What's the accounts receivable turnaround times? And how, I guess, some businesses may not have that problem, say, your hospitality type businesses, but because they get paid on at the time of the sale, but also they will have seasonal challenges as well. So it's asking, in that case, if it's a hospitality business and it's a seasonal business, how is the cash flow managed over those seasonal variations and periods? So that's a really good question as well. Looking down further into the balance sheet, fixed assets. So requesting a register or a schedule of all the listing of the fixed assets of the business, because ideally you're paying for that as well. The vendor will want money for those assets, but you're wanting to know, like, how old are these assets? Are they even actually usable, or how long until you're going to have to pay money to upgrade that equipment and tools and all sorts that you need for the business? So getting that register or schedule, confirm the age and things like that of all the particular assets. Stock, if the business has stock, what percentage is old or obsolete stock, because you don't want to be paying for that ideally either. Moving down to the liabilities section, is there any outstanding tax debts or loans that you need to be aware of? Why was the debt taken out in the first place? What was the purpose of funds? And is there any sort of supplier agreements in place, long-term leases that you need to be aware of as well? That's really important. And going through to the profit and loss, what makes up the net profit or the loss figure? You really want to delve deeper into this. It's not just about getting the reports from the vendor and going straight to the profit and loss, straight to the bottom line, and judging a business just based on that number, which a lot of people do, which don't understand the financial reports. So it's important to really delve deeper into that, into the revenue. What are the products and the services, the breakdown of those income streams, customer segments, trends over the past 3 years? Ideally, you've got the 3 years of data, and you want to see, is the income increasing? Is it declining? What percentage of revenue is your top 3 customers? So for service-based businesses, this is probably more appropriate for. Is there top 3 customers that are making up, over 50% of the income of the business? Because that could be riskier. So that's important to ask as well. And with your expenses, just looking out over the past 3 years, is there any large or significant expenses that have been increased in a year? Do they look out of whack? Asking what they are, asking the vendor, what's this for? Is it ongoing? Asking them if there's any expenses that are not reflected currently in the financials that may impact in the future. And team members as well, you see a wages and salaries line or contractors. Ask the vendor, what makes up the team? What are their roles, their capacity? How long have they been with the business for? Are they loyal? And what's the owner's role in the business as well?
That's awesome. Heaps of gold nuggets in there. So just to clarify, so that the main documents that we'd want to look at would be your P&L, your balance sheet, and if they've got the cash flow statement. And I think to what you said is really important. One of those documents alone doesn't tell the whole story. So if you've just got the P&L and it looks really good, it doesn't necessarily mean it's a high cash flow business. So understanding the balance sheet and the cash flow from month to month is really important to get a good feel of what actually owning and running the business is like on the day-to-day.
Absolutely. Yep, that's right.
Awesome. I'm sure everyone got a lot of value out of that. That's very valuable info. What's one financial metric that's often overlooked but is crucial when evaluating a business for purchase?
Yeah, as I mentioned, this is an interesting one because a lot of buyers will go straight to that net profit amount and just judge the business based off that. But it's really important that we take into account, obviously, what we just discussed. The operating cash flow ratio is one that I can highly recommend looking into. Now, there's a bit of a equation behind this, and we can post this in the group afterwards so that people can come back to it. But this is basically getting to know a calculation that's covering, what sort of cash amount is needed to cover the short-term liabilities of the business. So the equation is, in basic terms, operating cash flow divided by the current liabilities. Now, you can find these figures in the financials between the balance sheet and the profit and loss. So the current liabilities, there's usually a total line on the balance sheet which states what the current liabilities are as at a certain point in time. And to get the operating cash flow figure, that's where a bit of an equation comes in. So you want to take, your net profit, add back any non-cash related items, which is depreciation, amortization. So just look for those line items in the profit and loss. And then you want to take, because ideally you've got at least 2 years in terms of balance sheet and profit and loss historicals. So you want to take the difference between the accounts receivable, if the accounts receivable has increased from the previous year to the current year, you want to deduct that, because it means that a higher amount of accounts receivable means that you're holding more in invoices and you're not getting that cash paid as well. And same with inventory. If you've got increases in inventory, it means that you're paying more for inventory and you're holding that. You're not getting the cash in the door as quickly. So you want to deduct that inventory figure as well, the increase. And then also accounts payable, if that has increased. So that means that you're not paying suppliers as quickly. And you're holding cash for longer, you want to add that back. So that's the equation. It's net profit plus depreciation, amortization, less the increase in accounts receivable, less the increase in inventory, plus increase in accounts payable. We can put that equation in the group just so people can follow it. But I think it's a really important measure, because cash flow, as I said, it's really important to get an idea of what the cash flow is like for the business.
And just to add to that, I think what you're alluding to is, obviously when you look at an acquisition, there's price and terms that everyone focuses on, but there's also the third component of working capital and working cash. So is that what, in doing that exercise, is that to give you as a buyer a really good understanding of what working capital I need in the account every month just to cover the liabilities, on top of everything else?
That's exactly right. So you want to be able to manage all of your expenses to be able to run the business. And then ideally anything on top of that is profit. So knowing that baseline figure of all of your outgoings and your cash outflows is really critical to running a business.
Perfect. I'm sure everyone got a lot of value out of that. That's a really good, even though the calculation sounds complicated, I think seeing it written, everyone will realize it's not super complicated, but it's an awesome explanation. I appreciate that. Now, on the seller side, how can sellers present their financials in a way that makes their business more attractive to buyers, or at least prepare their financials?
Yeah, sure. So the very first thing is making sure that your financials are clean, they're updated, and they're accurate. So working with a bookkeeper or accountant is going to be critical here, because you want to make sure the data is reliable for both you and the potential buyer. And what that will do, that will lead to a more accurate valuation of your business as well. And, on top of that, once you've done that, preparing the financials, make sure you're prepared with those so that if you do get a potential buyer approach you, you're ready to go. You can send them all the financials that are needed.
That's a great one. I think, being prepared as a seller is often overlooked. And, as buyers look at multiple businesses, if there's a particular seller that's maybe not as organized or they're slow to respond, they might be missing out on opportunity because the buyer thinks they're not ready. They're not prepared to sell.
That's exactly right. Yeah, you want to be ready, because you never know when that opportunity is going to come by. So that's really important. And, working with an accountant over 6 to 12 months pre-sale can be really beneficial as well, because it can boost your business valuation. Your accountant can step you through little tips to be able to boost your net profit, boost your business valuation. So little things like minimizing any personal expenses you're putting through the business, reducing that accounts receivable. As I said, the more invoices that are outstanding for payment, the less cash that's coming into the bank account. We want to reduce the accounts receivable, get more cash in the door, increase your income. You want to pay down your liabilities if it's necessary, and clearly outline those one-off significant expenses as well. Especially if they're non-recurring, if they're not going to continue into the future, making sure that you outline those expenses so the potential buyer knows, okay, I don't need to cover that expense on an ongoing basis. And preparing contracts, leases, inventory, and asset listings. Make sure you're prepared with those types of documents as well that will go with your balance sheet, profit and loss. And any forecasts. I mean, people are going to look at the historicals and they're going to want to find out what the story is behind the historicals, because that's the proven data. But some people like to see forecasts as well, especially if you might have landed a new contract, a really big contract, and you want to show the buyer, hey, we've already landed this as a signed contract. This is income coming in at some point. So forecasts can be really beneficial in that type of instance.
I love that. Yeah. And so just on, I really like the part that you were talking about, the, personal expenses and one-off expenses, and kind of getting that removed if you can. Obviously, a lot of small to medium businesses do put personal expenses through, which is, accepted, right? But if you come in with them on the financials, already from the get-go, buyers are thinking, oh, the value of the business is after add backs, and that's kind of a mental barrier, even though it's not really a barrier. You can, as long as you can confirm it during due diligence. But I think it's a potential red flag for a buyer if they're thinking in their minds like, oh, I can't prove right now that all these expenses are actually not required. So am I going to overpay or kind of negotiate? And does that scare people away? So removing them as early as you can, like you said, will kind of put you in a way better position. From if it's super clean, there's no ad backs, or the limited ad backs, it's a lot more of a cleaner transaction from a buyer's perspective.
100%, and it's just a lot more clearer, and they can trust that that's reliable in terms of what the data is.
Yeah, absolutely. There's nothing more scary when you're looking at a business and all the value is back in ad backs. It's like, whoa, hang on, is this trustworthy?
Exactly right. Yeah.
Yeah. Awesome. So what are the common cash flow traps business owners fall into that makes selling harder?
Yeah, so this is an interesting one because it's quite an easy trap to get into. So not budgeting for taxes, GST, employee related expenses as well. So a lot of people think about putting a new employee on, and they'll forget that they have to pay, 11.5% super on top of the wage, work cover, all of that type of thing. So just really important you consult with your bookkeeper or accountant in terms of what other costs are related to employing. Business owners, they'll overestimate their income and their profits, which can put them into a detrimental position, especially with cash flow, managing the payments to suppliers and employees, etc. They rely too much on their larger paying customers. So that's quite risky, because if you lose that customer, and that's a huge chunk of your revenue coming in, then you're going to lose out again, and you might be paying employees and all the costs that come with running a business, and then you've lost a huge chunk of your revenue, and next thing you're in losses and you can't keep up with cash flow. So that's a big one as well. Excessive staffing. So obviously, improving your processes, optimize your processes, leverage technology where you can. And underpricing products and services is another big one I see, and low margins.
Yeah.
And this is just because business owners, they'll look at the market and they'll go, oh, what are my competitors charging?
Exactly.
And they'll match it, but it doesn't mean that you have the same overheads and
100%.
expenses as that competitor. So it's important that you look at your own expenses and see what your margins are looking like, because you don't want to fall into that trap where you're competing against a competitor that, it might be a larger scale. They might have less expenses, for every dollar of revenue they earn. So it's really important to make sure you know what your margins are and improve them where you can. Another one, seasonal variations. Make sure you know what type of cash flow you need to get through, underperforming periods of the business. So hospitality is a really big one. And
Yeah.
that's why hospitality can be so difficult, because of that downturn
Mm,
with seasonal changes. So
yeah.
yeah, they're the main ones that I
Okay.
see.
Yes, some awesome points there. I guess on you mentioned at the start around actual employee costs, or talking about on costs as opposed to just a salary. How does someone that hasn't kind of gone through that experience before, how do they look at that? Because I think there's a generalized bracket of up to say 20% that you could consider for on costs. How would someone at a really quick low, that has no experience, add on top of their wages just to get a feel for what it's actually costing the business for an on cost?
Yeah, I mean, it's going to depend on various factors, but you can kind of get an idea. 20% is probably a
Right.
good sort
A
of
good average.
idea.
Great.
Yeah, I mean, 11.5% super is on top of that
Mm,
wage. In terms of the wage that you're paying the employee, you've already covered the employee's taxes that you'll have to withhold, because you'll be working off a gross wage.
yep.
Um, and you might have work cover policy, which is usually minimal, but it depends on the industry. So just be
Mm,
careful of that one.
great.
So yeah, and then just other costs. What do you need to provide that employee to be able to do their job? Do you need to buy a $2,000 laptop for them so that they can carry out the work?
Mm,
Taking into account all of
yeah.
those additional little things, are you going to pay them a bonus? How are you going to retain them? So yeah, just
I
those
love
other
that.
considerations.
Yeah, and just guys, just on that, I've actually got a calculator that I use in a spreadsheet. If anyone wants it, just comment in the comments, and I'm happy to share that for free. Yeah, it's a really good resource. It's a basic one, but to Jamie's point, you think about the things that you actually spend on keeping someone, uniforms, education, training, all of those things add on to the cost of your business to hold someone in that role, and factoring it in like gives you a really clear understanding of what you're working with from a cost perspective.
100%. And just to add to that as well, I mean, you can look at those costs, but also downtime, productivity in
Mm,
terms of more service-based businesses. But, you think about training for an employee and admin time, you're not just paying for training, $1,000 to an external supplier to provide that training. You're also paying that employee to be able to carry out that training on non-dollar productive
yeah, so
tasks.
you're losing out on revenue as well as cost, the
Yeah.
additional cost, right? Yeah,
Yeah,
yeah.
so really, an accountant brain just really thinking into things logically, but
Mm,
it's important to recognize that as well,
yeah,
non-productive
100%.
hours.
Yeah, absolutely. That's awesome. Thanks for that, Jamie. And what are some ways buyers can quickly improve profitability after acquiring a business?
Yeah, we've kind of touched on a couple of these previously, but as I said, cash flow, I bang on so much about cash flow, but if you can improve cash flow management, tighten those accounts receivable, make sure you're getting cash in the door as quick as possible. Negotiate better supplier terms with your suppliers, especially if you're a product-based business, and inventory is a big cost to your business. If you can, negotiate with suppliers, whether it's a longer time frame to be able to pay them, or whether it's discounts, etc., that can really help with cash flow. Another one, cut unnecessary costs. So don't cut anything that you need to run your business, because that's going to then reduce the income that's coming in the door, or efficiencies and things like that. But, things like subscriptions, travel, do you really need it? So cutting
Mm,
those will improve your bottom line. Your pricing and your margins, as I said earlier, it's a bit of a trap. Just make sure you know your pricing and your margins are stacking up, and that you are covering all of your expenses and your taxes and things like that. Improve your processes and your systems. I think this is a really underrated thing
mm,
in
yeah,
terms of business. So, there's so many softwares and tech out there now, and it can be overwhelming, but leveraging tech where, it does suit your business and how you want to run your business, that can really, that can cut an employee. It can, things like that, that are going to save you money and time. So that's really important too. Customer retention strategies. So, keep front of mind, email marketing, socials, what can you do to be able to keep front of mind, because it's more expensive to go out and acquire new clients than it is to, retain loyal clients, keeping them on. It's going to cost you a lot less to retain those. And then income streams, my final one. So, any income streams you can build into your business. Think about your ideal customer, what they need apart from your services, but they incorporate with your services or your products. And think about that. What do they need? What aligns with your products and services, other income streams that you can build in without boosting the expenses at the same time.
They're all awesome points, and I'm sure everyone watching got a lot out of that. I think to summarize, I guess generally, it sounds like after acquiring a business, don't just assume that the business is running optimally, and think quite strategically as to there's probably some of the things that you mentioned that are quick wins, and some of the some more longer term, and looking at it like, what are my top priorities that I can do today that kind of either boost cash flow or increase profits. And then what's my long-term strategic play? What can I focus on in the next 3 to 6 months to make sure that we're continually optimizing? Sounds like a good way to look at it.
Absolutely. Yeah. As you said, you nailed it there. There's some things you can implement quite quickly, but there's other things you have to be a little bit more patient with, like systems and processes and implementing different things.
Yeah. And I think to add to that, if you're not an expert or you're not familiar or experienced in that, lean on people who are experts in that field. Like for yourself, if someone needs help from a cash flow finance and kind of maybe even understanding that what their true costs are around their pricing, lean on someone like yourself, or someone that's in optimization, and help them look at their workflow and their processes and understand what the opportunities are. Because I'm a big advocate for not trying to learn everything yourself, because that's the slow hard way. And if you lean on experts, you're going to get to where you're going a lot faster.
Absolutely. And you're actually going straight into another section that I'm going to talk about as well.
Well, I'll stop talking so I don't take your answer. Sorry. Jamie, what's one habit or process that financially strong businesses follow that ones that struggle don't?
This is the exact,
Oh,
this
nice.
is the exact area that I wanted to touch on. Investing in the right advice is exactly what I was going to say. So, it's not a cost to your business. The right advice is not a cost. It's something that will minimize your risk. It'll save you money and time in the longer term. So with business, it's really important not to just focus on the short term. Think about the longevity of your business, sustaining your business and your performance and growing your business. Some people are quite happy to just have a stable business and they're comfortable with that, which is completely fine, depends on your goals, etc. But still, investing in the right advice, either way, it's just going to save you so much. And I've seen it go wrong where people haven't reached out for the right advice. Just from a bookkeeping perspective, like business owners that have done their own books because they're like, I need to save money. And, a couple of years later, they're behind in their tax returns, BAS lodgements. They haven't been compliant. They've got the ATO chasing them for lodgements and payments, and that's really stressful. And you don't need that when you're running a business. You need to just be able to maintain things. It's a lot more pleasant running a business when you don't have the ATO chasing you.
100%. And I love the way you started that, in that, it's like thinking about expenses in a different way. I think it's easy, like you said, when things are getting a little bit tight, you look at the P&Ls, like, what can I cut to save money? But if you think about it on the other side of things, what if you're like bookkeeping as an example, the example you just used, if you're trying to save money by not paying a professional to do bookkeeping, what are you then tying your time up that you could be doing dollar producing tasks, or business development, or the things that you are really good at, to increase cash flow rather than reduce expenses?
Exactly. Yep. Just being really mindful around, where your money is going in your business, and making sure that it is I guess generating ROI. We
Yeah.
want to make a profit in the business. We don't go into business for anything else. So yeah, thinking about, each expense line and your profit and loss, is that generating me ROI? And I can nearly bet that the right advice in terms of consulting, accounting, bookkeeping, etc., that's going to get you the ROI.
100%, and it might not be immediately, but long term, you even
Yeah.
in within the 12 months that you invested it in, you're going, if you actually sit down and think about it, you'll be able to tie it directly to a return on investment.
Absolutely. Whether that's saving you time so that
Mm,
you've been able to generate X amount more of income, it makes such a huge difference.
100%, absolutely. What's a common bookkeeping or finance mistake that costs businesses money every year?
Yeah, there's a few, but I would say the biggest one, not tax planning and not forecasting for tax payments. So
Mm,
what I mean about, obviously, forecasting for tax payments, that's a cash flow issue, but not tax planning. What I mean by that is consulting with your accountant at least on a 2 yearly or a yearly basis, and sitting down with them and going, where's my business sitting from a profit, from a tax perspective? Usually tax planning is done with accountants anywhere between February and June every year.
mhm.
So you'd sit down, if you're in more so if you're in I guess, a profitable position, that's when you'd really need to do this. Sit down with your accountant. They'll say, hey, you're on track to earn X amount this year, and this is what your tax bill's looking like. What can we do to reduce your tax in a legal way? And what can we do to bring that tax bill down? And then, reviewing the business at the same time with your accountant. Is there any guidance they can give you to improve, or areas in the business based on the financials that you can improve in your business? So yeah, tax planning is a big thing that, if you are a growing business, especially, because the tax system is historical. It's largely historical, which is where people find themselves in a little bit of a tiz, because they didn't realize they had so much tax to pay.
Mm,
The BAS was way higher than the previous BAS, things like that. And it can be stressful. It can come at a shock for business owners. So having that tax planning meeting with your accountant, that will clarify a lot of things. And you might walk out of there with a full tax plan going, oh, I've been able to reduce my tax by X amount. And it can be quite significant, the difference that
100%.
can
And just
make.
I would personally say, if you're not having that meeting with your accountant, I would almost say you're probably with the wrong accountant, because if they're not pushing that
Yep,
meeting, they're not looking after your business in a proactive way.
absolutely.
And to add to your point, it's not just about saving tax, it's where can you invest that money that otherwise would have gone to tax to increase your business. So how can you improve your business while saving tax money, I think is a really good way of looking at that.
Yes. Yeah, absolutely. Yep.
Awesome. All right, last question. I've purchased a business. Where do I begin, and what's the process in moving forward to ensure I have clean financial records from day one after taking over?
Yeah, so this is a good one because I've had a few questions surrounding this. So, the first thing is go to your accountant. So, once you're in a position where you know that you're going to buy this business, you would have had to have paid for advice by now in terms of, what do I look out for? What are my risks in taking over this business? You've agreed, yep, I'm going to take over this business. You'd go back to your accountant and ask them for the structuring advice and setup. So, they'll give you an idea based on your goals and your situation. They should be digging really deep into that. They should be asking you, what are your goals? Because that will determine the structure that's better, the best suited to you.
Mm,
It could be a company, it could be a trust. They're the sort of main vehicles that are used. And so it's important to get that advice. Your accountant will set that structure up as well for you. And the next step is then setting up your accounting software. So a bookkeeper can come in and do that. We do that. We do a Xero software setup, training and support. So once you've got your structure in place, then probably a month out of settling on a business to even 2 weeks before, starting to get the accounting software set up going
mhm.
is a really good strategy, because once you take over that business from day one, your accounting software is already set up. Your automatic bank feeds are already going into the Xero file as well, and everything will be captured in that Xero file. We usually mainly deal with Xero. That's why I'm talking Xero. And so then you'll have everything working from day one. You won't have to worry about the financial management. It's something you can be proactive about and you can pre-organize. And then, day of settlement, you can just focus on the other things that you're going to, implement in the business, get to know the business operations and be able to generate, boost that bottom line as soon as you can.
I love that. Particularly the fact that you set it up before you take over, because as you said, day one of settlement and the first few weeks, you're trying to understand the business, meet the people, get everything working, and finances are probably going to be one of the last things that people want to be sitting back at, looking at bookkeeping and stuff like that. So if you've already got it set up and it's already working, it's one less thing you have to worry about.
Absolutely.
Awesome. Before we take off, it's been super valuable. I really appreciate your time. Is there any other thoughts or points that you wanted to get into the group before we go?
No, I think we covered off a lot today, Stuart. I'm hoping the group got a lot of value from that, some tips and some gold nuggets. It's been awesome to speak with you and sharing a little bit of information around the financial management side of things. And yeah, hopefully that's added a lot of value to people.
Absolutely. I know I got a lot out of it. Guys, really appreciate you watching. Like we said, we'll drop in the formula for, I think it was the operating cash ratio, was it?
Yeah, that's correct.
Yep.
Operating, yep.
And please reach out if you want the on-cost calculator, as well as Jamie will be in the chat, or at least in the comments. If you wanted to reach out and ask any other questions, please feel free to. So thanks for your time, guys. Looking forward to seeing you soon.
Thanks, Stuart.
Thanks, Jamie. See ya.